Welcome to Getting Rich with Rich. I'm Rich, founder of Under the Radar Report. Well, what a reporting season it's been. I mean, it has been a wild ride already in 2025, and this reporting season, we're really seeing stock picking coming into its own. It's just fantastic to be an investor. I mean, not all the time, but I think that definitely right now the glass is half full. I mean, we're seeing a lot of stocks getting double-digit boosts, as well as a couple of disappointments, but that's going to happen. Overwhelmingly, it's telling us investors are hunting aggressively for sustainable growth at the small cap end of town. That's what it's saying. We're seeing more Nick Scali's. That's what we're seeing, which is exactly what I've been hoping. Before I get to a truckload of stocks, I want to point subscribers to our website where we designate which stocks are core, which stocks are growth. We talk about it in our $500 strategy, building wealth. But basically, you need to own a number of stocks whose valuations are based on solid fundamentals. I mean, this is the core of your portfolio. Only when you build up your core can you really chase growth. So when you're paying for growth stories, when you're paying for stocks that sound good, there's a lot of momentum behind the stories, these can often disappoint. I mean, it's very ephemeral. So the key is not to invest too much in these sort of stories. What you want to do is really have a strongly weighted portfolio that can perform in all weather situations. I mean, as Ashley Judd said to Val Kilmer in Heat, it's like risk versus reward, baby. Let's get on to the stocks. Alliance Aviation, AQZ. Well, contract aviation services. This is firmly in the growth camp. I mean, it's experiencing turbulence at the moment with the huge cost of 30 Embraer planes, and we're seeing that evidence through increasing interest costs. But our message is hang in there. Debt has peaked. Free cash flow is going to improve. Dividends are on the way. Next, look, I've mentioned this one a couple of times on Rich with Rich, medical developments, MVP. Look, this is as growthy as it gets. It's been a story that's been a long time in coming, but finally we're seeing fruition. I mean, it's a stock that's been through a lot of pain, which, let's face it, this company, as a manufacturer of the analgesic Penthrox, aka the green whistle, should prepare investors for. But you've got to read the free ad in the FT. I mean, the head of the Chamonix Ski Patrol calls the green whistle Penthrox a game changer. What more substance can you get? I mean, this is, the guys at the top of the mountain saying Penthrox a game changer. Look, it's high risk growth. Then we get more onto core stocks. And this is where companies have been transitioning from growth to core. One of them is our best buys, XRF Scientific. They do mineral testing services. Basically, it's been one of our best buys. It's built up a business with 3 revenue streams. So it's got diversified revenue streams. It's going through different periods, and it's still generating income. It's still generating growth. So you should see the graph. You should see the spike in the share price. It's more than doubled this year. So I'm not sure how much longer it's going to be on our best buys for. But, it could be downgraded to hold next week. SRG Global, another one that's been on our best buys, but it's not a core stock. It's growth. I mean, this is a cyclical contractor. SRG Global's had a long and storied history of being in scaffolding, and they've broadened out their services, but really they're very cyclical. And I guess they did have a great result, but it's getting harder and harder to impress the market, and we're saying to take profits on that one. Southern Cross Electrical, another contractor. Look, I must admit, contractors are a more dangerous space, but this one has been reducing its cyclicality just because its services are in such demand from a broad base of industries. First, you had the mining services, then they came over, to the East Coast and did a lot of infrastructure work. That's been ramped up with data centers. Now we find they're being used in a battery plant. So basically, grid scale batteries. So basically, the resilience of earnings are what's impressing the market. As for price, we took profits recently. We're holding on, we're letting our profits run, so we're more relaxed, but it's core. Infomedia, another one that's moved from growth to core, in my view. This company does basically parts catalogs for the automotive industry. After sales is going to be more and more important as the automotive industry transitions. It goes through a massive change. So, these companies really need what Infomedia provides. We're talking about the OEMs or the manufacturers. We're also talking about the dealerships, which we're increasingly see the brands merging into multi-brand dealerships. So the forces are working in its favor. Has a great subscription business. IFM is the code. Check it out. Another one that could go either way, but which I think is more moving towards the growth space. When you see the cash, $38 million of cash, they've sort of bulking up on their balance sheet. Nanosonics. These guys do deep cleaning technology called trophons for probes. They're also getting into endoscopes, which is called Chorus. So there's more risk there. I've covered this company for a long time. I can honestly say the quality of this company's earnings are improving. They have improved their earnings. They're not paying dividends, but the company's size is big, and they've got scale. But I would say that the most important thing is that we picked it in August around $3. Now it's trading, $4.20, $4.30. This has been a big winner. It's gone up 22% in the result. Look, companies are moving feasts. What you're looking for in small caps are those transitioning from growth to core. This means we're getting more confidence in the fundamentals. Costs are consistently being covered. Basically, this can sometimes mean dividends, not in the case of Nanosonics, but most important is that they've got a solid customer base. I cannot emphasize that enough, and it's summed up in our risk rating. There are so many opportunities coming out of reporting season. There really are. All you have to do is go to our website. I'm going to be back at you next week. There's so much to talk about. See you next time.